in the Australian context, right, we've got this Chinese force coming through, but we've also got a lot of local pressures on households and businesses in Australia. Now, of course, the main one is the interest rate move, which has gone up significantly. The RBA's put rates up from ridiculously low levels to levels that are still low relative to other players internationally. If you look at rates in the US versus Australia, rates are still quite low. But those rate rises are really hurting. Plus, of course, you've got significant pressure on the housing situation. And part of that is driven by very high migration. So we've got more people coming into the country than, well, frankly, we've probably ever seen. And I'll just show you this slide quickly. This is actually the estimated annual change in population extrapolated from the national accounts. Never seen so many people in. We've got hundreds of thousands of people coming into the country. Now, the question is, what are they going to do when they come into the country, right? Because the government's opened all the migration taps and they're actually doing more now. So we've got this significant flood of people coming into the country. Where are they going to go? Where are they going to live? How many of them are going to actually go into the rental sector, and how many of them are going to go into the purchasing sector of property? So that's one of the positive forces in terms of a lot of demand for property. But on the other hand, because of the fact that we've got all these issues with the financial pressures on households, we're now seeing also some people looking at their investment portfolios and saying, oh, it's really tough to make this work. Despite the fact I can put the rents up a bit, I can't necessarily put the rents up enough. So that's another factor. So in some cases, we're seeing more investment properties listed. And we're also seeing some people trying to buy property who are renters at the moment, because frankly, the rental market is stupid. If you look at the climb in rents, it's gone up 15, 20, 25% for some people. They can't afford that. So they're looking to try and buy anything. And so one of the factors in at the moment is we're seeing a lot of people trying to buy. And we've also got a lot of other people with fixed rate mortgages who are switching over. The old mortgage cliff story. Well, we're only halfway through that process. And so what that means is that people will be struggling for quite some time as they refinance. And then the final factor here is that it takes time. So, banks have actually extended, I call it extend and pretend. They've extended the loan life to make people more willing and able to pay those mortgages. They're in some cases pushing people onto interest-only loans. So the banks are extending and pretending. But the fact is that once you get into cash flow pressure, as many households are now, eventually it comes home to roost, but it takes time. And just to give you a little flavor of that, global financial crisis in the US hit in 2007. The peak for defaults in the US was 2011. It takes time. And so my argument is that it's going to take time to see the full impact on property in Australia. But of course, everybody is hoping that the Reserve Bank's going to reverse course and cut interest rates again. We're at 4.1 at the moment. And what I'd say is that I don't think they will. I don't think they'll be able to, because inflation is still very sticky. So we're going to live in an environment where interest rates are a lot higher, where the average borrowing power for a new borrower is down 40% from where it was just over a year ago. And so all of those pressures are flowing through. And so I'm arguing that we're at the beginning of a very important turn here in property rather than the end of something.